Hey everyone, me Kevin here. I am jumping up and down right now on the inside because we get to learn not only a lot about crypto, but we're going to learn a lot about crypto from a CEO of a public company, Steve Ehrlich. And Voyager Digital agreed to come on and tell us about their not only thesis as to why Bitcoin is going to 100K within the next 100 days, but also everything that we could think about possibly asking from the CEO of a public company in the crypto space. This is so super exciting. Steve, thank you so much for coming on.
Oh, thanks for having me. Excited to be here and look forward to our conversation here.
Steve, you think Bitcoin is going to 100K? We've got the market in the doldrums over the last few weeks. You're a public company. You're seeing it on both ends. You got to deal with the fiat currency stock market, but you're also dealing with the cryptos. What's going on out there?
Oh, it's volatility at its finest the last, especially the last 48, 72 hours. But look, I think it's no doubt in my mind. I think Bitcoin's going to 100,000, as you pointed out, in the next 100 days. I think we're in a consolidation phase, and I think when we break out of this is going to break out to the top in such a severe movement. So I think there's still such interest in Bitcoin. I think that more of those institutions are coming in, and then don't forget 1.9 trillion of stimulus coming again, and then there's more behind that. So you think about all that, and Bitcoin is now in that consolidation phase, ready to just break out to the top. No doubt about it.
Wow. And I mean, even in the last 3 months, it feels like it's already shot up. And so you think really this 55 to 47, that's the consolidation. Like we might not even go low. I mean, who knows, but we might not even go lower. Like we're ready to launch basically.
I wouldn't be surprised if it goes down, a little bit, a couple thousand here or there, but I think we're in this frame, this frame right now where it's ready to just pop up. There's still so much interest. We see it every day with the number of deposits that just come on our platform and new accounts opened. It's like ready to just explode. And, Bitcoin's the #1 currency. It's the most dominant one of all the cryptos. It's going to explode.
Wow. So how about Dogecoin? I mean, is Dogecoin going to follow, or how do you see the other coins?
Look, they all have a little place, and I am a little pro Dogecoin, and good old Mark Cuban. I don't know if you saw it. Mark Cuban just said that you can buy Dallas Maverick tickets with Dogecoin.
No way! I did not hear that. That is hilarious. I just want to do that for the experience of that. That is so cool.
Me too. I was like, I got to go. I'm in Connecticut. I'm going to go buy tickets to a Mavs game just using Doge just to see what it looks like, see how they do it.
Yes.
But yeah, he said that. So look, I think it's easier to use. It's quicker to move on the chain than blockchain. So than Bitcoin. So yeah, I mean, there's a lot of other coins too. I think that have a lot of value, that have a lot of upside to them because they're great projects. Dot's another one. We love Dot. I think Dot is a great project. We're seeing tons of customers come into Dot and ready for that to explode too. So yeah, I think Doge is another one. Doge, Dot, those are two big ones.
Isn't that a risk to Bitcoin though? I mean, if there are all these other ones that are maybe easier, quicker, I mean, why do we need Bitcoin?
Different purposes. Look, I think Dot as smart contracts, it's more competitive to Ethereum. So I think the fact that it can take some of that business away from Ethereum and writing on that Ethereum protocol is going to send a little bit of waiver through Ether. But we like Dot. I mean, Doge does a little bit faster than Bitcoin, but look, there's always a place. There's not one winner. I think that's the thing. I mean, and I'm an old equity guy. I've been doing this 27 years now in the equity markets. And if you go back to like 1999, 2000, 2001 with the internet, there wasn't just one winner. There was multiple winners. There's a lot of failures too. I mean, my biggest one I always talk about is pets.com because we all remember the sock puppet from the Super Bowl commercial. But that was like it exploded and then failed. But there will be some that'll exceed expectations and win, and there'll be some that will never get out of the gate. And it's just to do your diligence and do the research and find out which ones you like and which ones you think are going to succeed.
We frequently hear of like Kathy Wood saying, oftentimes we get these winner take most situations. Frequently she's talking about like Roku and Tesla. Do you think that could apply to cryptos though?
No, I think there's so many different projects. And like I said, I think there's Dot. Doge is a little oddball one. But Bitcoin, even our own token with rewards programs to it, the Voyager token, there's so many different things that are coming out that I don't think there's just a winner takes most in this at all. I think there's a lot. And look, what does winner take most really mean? Does that mean that we get an Amazon or a Tesla that's so much bigger than everyone else, but there's still multi-billion-dollar companies underneath them that also support the ecosystem? So there might be one that is so far ahead of everyone else, but there's so many others that are going to be worth a lot of money. And I think people can't always focus just on the big ones. Look at what is actually going to drive some value too, and might be a mid cap, which is nothing wrong with that.
Wow. Yeah, absolutely. I mean, so is it something where do you think, I mean, you came from the equity space. Do you feel like it even makes sense to invest in just, you know, a Tesla? Why not just invest in Bitcoin? I mean, you know, we get so much movement in the crypto space. How diversified are people even supposed to be these days?
Look, I am a big diversified investor. I do a lot of ETFs. I don't, pick stocks, but I'm an ETF guy. I don't have enough time to pick stocks and go do that. So I think diversification across ETFs versus different cryptocurrencies. I think baskets of cryptocurrencies and allocating across multiple of them is a really good strategy as well. And that's again why we have 50 something of them. So go across multiples. I'm starting to see people actually take $10,000 and buy 20 of our 50 and put it equally across that, because they're like, I want to be diversified on that. So I think diversification is always a good strategy. One bucket's never, I've never seen anyone, you get some people win that way, but it's really hard to win and create wealth through just one.
Do you think we'll see like an ETF of these, or maybe even multiple ETFs coming soon?
Funny you asked that, because I was on the phone with some Canadian counsel and investment bankers this past week, asking the same question, like, can we, how do we get to an ETF world? Because Canada's actually adopted the ETF, right? They have the first Bitcoin ETF, although my compadre Jarrett Lillian, who's on our board, ex-CEO of E-Trades, the COO of Wisdom Tree, says Wisdom Tree had the first ETF, and they had it in Europe, well before the Canadian ETF. But the Canadians seem to adopt this, and I think we will see some sort of structure that has more than one cryptocurrency in an ETF. That's coming, and I don't think it's that far away.
Wow. I mean, that's super exciting. And you're a public company. Why did y'all go public? It looks like you're on the OTCs. You're headquartered in the United States. Is this helping you grow faster, or tell me more about being public?
Look, when we started this journey 3 years ago, and we like to say now we started this voyage, 3 years ago, we looked at the marketplace and we said, what do we want to do? Do we want to take private investment? Do we want to take money from venture capitalists, private equity guys? Do we want to go public? And we chose to go public in Canada. And we felt it was the best way to get trust and transparency from consumers in crypto. And clearly it put us in the leader spot in that, because we're the only one agency, broker, or exchange that is publicly traded. You have a lot of miners, we're the only one. And now Coinbase coming behind here, with their direct listing soon, and then others probably coming behind that. But we've already set the standard with all the internal controls and everything we had to put in place. We felt it was the best way to get trust and transparency.
As being a public company, in other words, in some sense, being public potentially leads to customers maybe believing in the company more, giving it a try more, is something that you were thinking.
Oh, 100%. I think what we have now today is we've got the customers that are buying our stock in the market. And, we're only US today from a consumer perspective. We will be in Canada over the next few months as we work with the regulators there. So, in the US, they can go buy the stock on the OTC markets, use the platform, go buy the Voyager token for the rewards. So you have 3 entry points to engage with your consumer, which is different than anyone else. We've got our token, our stock, our platform. So now we're engaging with consumers 3 different ways rather than just one. And that makes a big difference.
That's super exciting. So I got to know, I mean, this big stimulus package here coming, you had mentioned or kind of alluded that, oftentimes when the stimulus money comes, we could see a lot of funding start flowing into cryptocurrency. Is it possible we're going to just see this, like, basically cryptocurrency surge after this next package? Or, I mean, how much are people actually depositing this money into crypto?
Well, the last go around, the $2,000 checks, we saw quite a bit of $2,000 deposits. And look, there's a whole, you and I were talking before, there's a whole big conversation to be had around, who gets the stimulus. And look, they changed some of it now. to, I think you phase out at like 80,000 rather 85,000 of income rather than before it was 100. So there is some effect of that people are getting the 2,000, maybe don't need it and saying, look, I'm going to just go invest in cryptocurrency because the upside to crypto is far greater than the upside in the stock market. And I think the other thing that you touch on now, I think with the new stimulus coming that people will do and invest is because of, I think retail consumers, after what happened in the GameStop scenario, think and believe that the crypto markets are the most fair and fair markets for retail consumers, because you're not having regulators saying no short, no this, no stop trading. So in this case, it's the most fair market for retail consumers. So yeah, I think you're going to see more flood come in of retail consumers.
That's such a good point. I didn't even think about that, but you're right. I mean, after what happened with GameStop, I mean, how can people not feel jaded that really, the suits come in and stop your ability to trade, or however it ended up working out behind the scenes, the retail customer essentially got screwed in that case. Whereas in crypto, I mean, golly, I mean, you're so decentralized and in terms of the actual currencies, and you're just operating as an exchange, really, right?
Yeah. So look, I think from our perspective at Voyager, we're connected to 10 plus exchanges, market makers. So we're finding liquidity across the globe for consumers. Now, there is no set regulation in the US outside of making sure you know your customer and you do anti-money laundering and understand all those rules that FinCEN has put in place. But when it comes to the trading of the markets, there's no set rules. So in the equity markets, they have rules. They have shorting supposed to be reg show. There's national best bid and offer. There's all those things that come into place. And then we all know that in the equity markets, that every retail broker sends all their trades to market makers. They don't send them direct to exchanges. In the case of us, we're sending trades to all these exchanges, as well as supplementing that to market makers. So it's a completely different model that makes it more fair for consumers, definitely more fair for retail consumers.
Got it. Yeah, I mean, it's so incredible to think that cryptocurrencies really started from the consumer. Usually we see corporations or the government come up with a new product that the consumer can use or adopt. But this was something homegrown that really is now becoming institutionalized. What do you think about the fact that now Tesla's getting into this? I mean, does it make sense to have corporate treasuries in cryptos? And will you do that at Voyager?
Yeah, it's a great point. It's the beauty of crypto was it started with the retail consumer. The equity markets never really did. They were high net worth individuals, and that's 200 years ago, if not longer. But the retail market all formed, to create the crypto market. And so when it comes to corporates, look, it's interesting to see Tesla and MicroStrategy use their treasury into Bitcoin. What we're really seeing is we're seeing small and mid-sized companies, what we call the SMBs, small and mid-sized businesses. They're coming in by putting some of their treasury, but really doing it on the USDC side, the stable coin side, so they can get 8.5% or 9.5% interest with some boosts. That's what they're doing with their treasury, so they can earn more out of money that's just sitting in the bank waiting to be used. And I think that's something that's a constant for us. And if you think about it, think of a startup company that raises $10 million and says, okay, I need that 10 million because over the next 12 months, I'm going to spend $1 million a month to build my product. Well, you take 8 million of that, put it in a USDC stablecoin, and you're earning almost 10%. You get more headcount out of that. You can actually now take that treasury and you're going to earn interest on it that you can now use to spend more on employees or tech stack or whatever you want. It's a brilliant strategy for small to mid-sized businesses to help grow what they want to do with their business.
That's fascinating, really. So it's the smaller businesses that are almost going crypto only. Is this happening in the United States, or is this more like in developing countries where maybe in Nigeria you just can't trust your government's currency, or what's your take on this?
Yeah, for us, we're seeing this small mid-sized business in the US. We have a lot of customers that also run these businesses that say, hey, I want to put my corporate treasury to earn more at it so I could do more with my company. And I think that's going to be a pattern that continues. They're not receiving yet money for their goods and services through crypto, but they're taking the dollars that they receive, investing it back into the stable coins, and in some in Bitcoin to earn the upside in the Bitcoin, the interest on the USDC, the interest that we give on Bitcoin, because there's opportunities to earn interest on a lot of these assets. And we'll also work with folks to stake them. So, some of the coins that you stake, people can get return on too. It all helps the balance sheet of a small to mid-sized business and allows them to do more with the existing balance sheet. And that's just good balance sheet management for any company.
Got it. So, I mean, I guess what confuses me though, because it makes sense. Like, why would you not have your money in cryptocurrency if you can get, 8% or 6% or whatever it is as a yield, just having your money sitting around essentially in savings? Usually with some yield comes risk. What's the downside? I mean, can't people what if the people that this money gets lent out to or whatever lose it, or there's some kind of failure? I mean, isn't there some risk?
Definitely is risk. Look, I think everything you do, when there's yield, there's risk. But in the token of us, and that's why I say you got to look at who you're working with on this a lot. Who we lend the coins out to get the yield, which we give 90% of it back to the consumer, is big parties. We work with public company Galaxy Digital, which is on the Toronto, rumored to be going to NASDAQ. We work with BitGo. Everyone just saw a bunch about BitGo, and now they got a New York State trust license, and they're backed by Goldman Sachs. Those are two of our biggest parties. And so Jump Capital is another one that we work with. And so really big balance sheet guys. So you're minimizing the risk because of who we're working with. I think that's a really important aspect, because sometimes you go to the interest bearing components, some of the players in that space, you not really know where the coins are going. Us, it's pretty direct. And we're a public company, so it's all disclosed on the financials, how much we're lending out, so people can see it. And that's a big difference.
Who is borrowing this? I mean, are these other consumers, or are these like institutions?
Yeah, it tends to be firms that are trading their own capital, because we all know that if you ever tried to take your cash out of the bank on a Saturday to go fund trading in a global exchange, it's not happening. Even if you wanted to take your cash out and go to us, we're not getting the money. The money's not going that way. So these big proprietary firms, Galaxy and BitGo and so forth, they need to fund their exchange partners around the globe. So the only way to do it is through the stable coins, because you can move it fast. And if they're borrowing, if we're giving out 9.5%, maybe we're making 10%. If they're paying 10%, they're probably earning that in the first month of their trading, because of their trading strategies and their high frequency trading. So they're earning a lot more than that.
So you're saying it's so profitable for these institutions to be trading Bitcoin? Is it because they're collecting fees, or just in swing trading it, or that they can afford to pay 9-10%? I mean, look, I come from real estate. In real estate, I hear 9-10%. I'm like vomiting,
Yeah, look, I think it is the global exchanges have a lot more, if you can access global exchanges with these prop shops, you're getting a lot more inefficiencies across the exchanges and across the globe. And they see those. So there's short-term trading, there is some swing trading, and they have all these, complex models to take advantage of all these inefficiencies across the globe. There's inefficiencies, whether it's a Bitcoin dollar or Elrond Bitcoin. There's all these inefficiencies among pairs and across exchanges. And these guys have built trading strategies to take advantage of that.
Ah, I see. Okay. So I guess the question there is, in what scenario could people potentially lose their money here? Like, is it like, what if a Robinhood happens and the suits, we like to call them, they end up having some funky derivative that goes bad, whether it's options or shorts or whatever, and then all of a sudden the system seizes up. Robinhood CEO on an interview here on this channel, he said, well, this was a 5 sigma event, maybe unofficially it could have been like a 10 sigma event from happening. Well, that seems really rare, but it happened. Right? Couldn't that happen here too?
Now, look, I think that's why you have to choose your partners really carefully, right? And so we're working with 2 or 3 partners, and that's it. And we understand their balance sheet. We know how they're levered, how they're actually what they're doing with the coins. And in Galaxy's case, they're a public company, so we get all their financials. The public can see their financials, so everybody gets a clear picture into what's going on. So we feel really comfortable with that. And like I said, I think the risk reward on that is right where it should be. And I think that effectively the partners you choose is the big key to this whole thing.
That makes a lot of sense.
There's a lot of people that send coins to smaller private equity hedge funds, high net worth guys. There's a lot more risk to that.
I see. Okay. So how do you compare to like, maybe we can clarify the landscape here, because
Sure.
there's, it's getting a little saturated. We got, there's the BlockFi, the Gemini, Robinhood's in this, Weeble's in this, like, whoa. Tell what's your edge?
Yeah, look, our edge is a couple things. One is we allow trading on 50 plus coins. Two is you earn interest on like 24 of them. Three is you can actually crypto transfer, bring them in or out for about 22 to 24 of them as well. So it's a lot different. So if you look at the landscape of, let's take the traditional equity online broker like a Robinhood and a Webull, no crypto transfers, no interest, 5 or 6 coins. So that's a lack of an offering. I tend to say if you're only going to offer the top 5 coins, give or take Bitcoin, Bitcoin Cash, Ethereum, Litecoin, and the old days before the SEC got involved, Ripple. If you traded those 5, that's like telling stock investors you should only trade the FANG stocks. Forget everything else; doesn't matter, because let's just stick to that. So plus there's some data you can actually see on in companies like Webull too, because they Apex, their clearing firm, is a public company, so their decks out there, they're going SPAC under North Star 2. You can see their data, and although they have a lot of customers, there's not a lot of trading volume coming out of them. So we want the customers that, our average customer size is about 10,000. I think guys like Webull and Robinhood are about 5,000. So we're double that. And we're all crypto. Their average account sizes is crypto and equities. Ours is all crypto. So we get really, engaged consumers on the front that like to use our app. They come back multiple times a day. They love seeing the flashing red and green. Green a lot more than red, but they love to see that, check their portfolio, and make multiple deposits, multiple trades on our platform. So that's that side of the world. And then you have the BlockFi, the interest side of the world. They're an interest-bearing play, and we're, again, trading and interest. So we give people the ability to trade without and earn interest without any lockups. So completely different play from those guys. We went down the middle. Everybody chose one path or the other. You have the exchanges that are really focused on on trading only. And we were like, we want trading, interest. We've got our debit card coming. So we want to be financial services for all.
Oh, wow. And so some of the other platforms, they maybe don't let you do maybe, tell me when you say trading, I mean, I know I can go in and buy and sell. Are you talking more like limit orders and like day trading, or clarify maybe that difference for somebody listening?
Yeah, we do have limit orders, and we're working on stop limits too. So,
oh wow,
so it's a different, from what some of the other guys have. It's one of the most requested functions people want from us is a stop limit, and we're working on that. But limit orders, you could day trade with your money. It's instantaneous settlement, so there's no, in a typical day trading world, in the equity world, you have to have a certain level of account to be able to day trade, like $25,000. Otherwise, for a pattern day trader. And with us, it's like you can trade to your heart's desire in a given day. And then when you're set with just Bitcoin at the end of the day, you earn interest. If you're left with Ether at the end of the day, you'll earn interest. So you don't have to lock them up. We'll let you trade it all day long. We encourage you to actually use the platform and, all day long.
Got it. So would you say then the vast majority of the money that you're lending out is going to these larger institutions that are doing this trading? It's not like, Joe, the ice cream vendor, is getting my Bitcoin, and if, it's a cold winter day, he's going bankrupt, I have risk.
Yeah, we don't do any of that. We're straight to these big institutions. It's the risk parameters we've set as a public company, and why it's easy to see it in our disclosures and our financials. We just put out our December financials, got posted on Canadian CDR the other day on Monday, as did on the OTC market, so people can see all the data. And like I said, it's only big institutions because we don't want to carry that risk for our consumers.
Now, how does pricing compare? I did a comparison the other day between BlockFi, Gemini, and Robinhood, and I was actually blown away that Robinhood had the best pricing out of like 5 trials. I haven't done a comparison with Voyager yet, but I want to know why. Why do you think that would be?
Oh, look, I think everybody's pricing model is slightly different here. I think we're closer to Robinhood on their pricing and cheaper than the BlockFi and Gemini. Look, our average spread on Bitcoin, because it's a zero commission broker, but our average spread on Bitcoin's in the 40 to 45 basis point range. We all know that when you go to, there's 2% fees on Coinbase, there's 2% fees on Gemini, there's Cash App, PayPal all have 2% plus fees. So we want, we're down in the Robinhood sense of the world because, again, we want to engage people. We want people to come to the platform. We want them to use the platform. I think a lot of cases, some of those apps are more, intended for people with lower cash balances that want to buy $100 of Bitcoin and hold it for, the next 5 years. We want our folks to hold Bitcoin long-term and crypto, but we also want them to trade and be effective and create wealth through trading, investing, earning interest. So a little bit different model. Everybody's model is slightly different, but that's where we sit.
Is it possible that these yields are going to converge down to 1-2% in the future?
That's a great question. I get that all the time. I spend a lot of time on the phone with on virtual calls with investors, and it's always one of the questions. And the answer is we'll get some compression, but I think we're probably 3+ years out. I think, if we ever get to a digital currency, a governmental digital currency, we might see a little bit more of that. But I still think these yields will be there for a while. But the other thing to remember is, more and more coins are starting to go on a proof of stake. So you're going to be able to get the staking rewards, and we do that for consumers too. We call it interest, and we give them the interest, but we do all the staking on the back end because consumers not everybody understands how to stake, what it means, and so forth. But I think any compression that might come on some parts will be, offset by more and more coins being staked.
Well, so the staking, maybe can you talk about staking a little bit? Because when I think of staking, I think, okay, people are putting up cryptocurrency to basically create that trust and verify transactions.
Yep.
But if the value of a cryptocurrency goes down, then the value of the stake goes down, and it almost feels like a potential declining spiral that could happen. Staking. What's the future there relative to the proof of work at Bitcoin?
Look, I think it's where most of the stuff is going is in the proof of stake. Okay. And you're seeing it more and more. And so I think that you will see some variability in those, in the staking. But I do think that as it becomes, and we're seeing more and more of the coins go on that model, look, Ethereum going to the 2.0, we're going to see more and more people figure out how to stake it or allow folks like us to do it for them.
I see. Okay. So, there's such a debate as well between Bitcoin and Ethereum that maybe Ethereum's the future because it's faster. But then other people argue, no, but Bitcoin's more secure and we can have there could be ways to, just institute that 10-minute delay or whatever that Bitcoin needs. I think, for example, who is it? I think Visa is considering starting to do accept some Bitcoin payments, and that in the meantime they'll just bridge it with fiat. Can you talk to this a little bit? That speed of Bitcoin, and if we start having to need a clearing process for Bitcoin, are we just going back to the suits, and is Ether the better option?
Look, I think the competitor to Ether really winds up being Polkadot, and so I think that's one that people should look at. But on that with Bitcoin, I think we're still. I've said this, and it's kind of a contrarian approach in that Bitcoin for payment rails is still a few years out because of some of those things, the time, the volatility, and it's really not the best use of payment. And then really on top of it all, forgetting all that, is the tax ramifications of it by the IRS, right? So if you bought Bitcoin at 10,000 and you want to go buy an Elon Musk Tesla for 50 grand, and you go buy that, and you're going to pay because he accepts in Bitcoin now. Here's 50,000 of Bitcoin. You just generated a $40,000 tax gain. You got to pay Uncle Sam 20% on that. So your Tesla no longer costs 50 grand. It now costs 58 grand. So, and state taxes, so probably more. And so until some of those things are figured out, forget the timing mechanism of it. The taxing mechanism, who the hell wants to pay, an extra 20% on, and that's short-term gains. If it's long, that's long-term gains. If it's short-term gains, it's going to be based upon your tax bracket. So it could be up to 40% for people. Who wants to do that? That's really where, and I don't hear enough talked about that. in the fact that people think, oh, it's a payment mechanism. Well, how are you going to handle all that tax side of it? And we're in
Wow.
tax
Yeah.
season time, right?
I haven't even considered that because I mean, if I've got, you know, 10,000 bucks in the bank, let's say, and I go buy something, I'm not really thinking about it because I've already touched the money. Like any tax implications have already
Correct.
occurred. And it doesn't matter if the dollar goes to the moon versus the euro. I don't realize any kind of tax implications there. But what you just said is really interesting. Oh wow, my Bitcoin just, like, for example, me in California here, let's say I bought a Bitcoin at 10K, it goes to 50. I go buy a Tesla with that because here's my coin, here's my 50K coin or whatever. I all of a sudden it's like, wait a minute, Kevin, you're paying 55% on your marginal tax bracket. Hand over 25 grand or whatever. Oops, there's an unexpected tax bill. Do you think that's going to go away? I mean, but then again, it is considered an asset in some cases. Like, ooh, that's messy.
Oh, I think that's what we have to see. That will really unlock if it's considered a currency, then over time then the payment rails, the other issues will get taken care of and will be used in payment. But the tax is such a big one that we have to solve that. And I don't think there's being thought through from that perspective yet. I think everyone's trying to figure out how to regulate all these, and then we'll get to the taxing perspective of it. But the IRS has asked you to check on your tax return if you bought and sold. Remember, that's the other thing that came out this week. If you just bought Bitcoin for the year in 2020, you don't have to put that and check that box on your tax return. If you bought and sold, you do have to put the check the box. So I think they're trying to figure out how to do this. Like, what do you do?
Yeah, no kidding. I wonder if then they're just going to ask for like your wallet, ID or something like that, and then in theory they can associate your wallet ID with your social, and then if they do that, now they can pretty much track everything that you're doing, and then if they get enough socials linked to wallets, then pretty much they map out everyone in the country, and the whole privacy element could disappear. Am I wrong about? Am I speculating on that?
No, you're not. And actually, it's a good concept, and that's why I think when I hear these misstatements made by folks in government that crypto is being used for all this bad activity, you could trace it all. It's there. Just spend the time, get the knowledge, figure that out, because you can trace where it goes. We all of us in this space as well use different providers that actually allow us to see where coins go. If someone pulls the coin off our platform, we have to do it under the AML rules to make sure they're not going to what they call bad places, the black market and so forth. So all that work's being done. The government really doesn't have their hands around how that's being done and understand it well enough. And I think these are all coming together over the next 12 to 24 months to have real regulation and understanding. Regulation, tax, all that's going to come together. But you're right. Effectively, you have your own wallet, your wallet address. They can associate, Joe Smith to that wallet address if they want.
Well, there goes the privacy part. Thanks, taxation again.
Well, that's why they don't want, there's such heat against some of the privacy coins, right? Because they don't want people to use privacy coins to mask what they're doing. So there's all these things. And that's why I think it's such a complex argument in the government, because they don't understand all the intricacies of it. And look, I've spoken to my own congressman about it, and he's like, we need to learn more. It's a lot to be learned. It's a completely different financial structure than what a lot of these people have grown up, working within. And there's a lot of congressmen that are ex, Wall Street or bankers or been in the financial services. So they're trying to learn a whole new infrastructure.
No kidding. Yeah, just because you're good on Wall Street doesn't mean you understand cryptos. I mean, look at Janet Yellen. I mean, look, I totally respect her. Her time at the Fed. Now she just started her job at the Treasury, taking over Steve Mnuchin's seat. But just the other day, she was railing on crypto about how much crime there is. But then when you actually look at the stats, I think there's somewhere around 4 to 5% fraud with the dollar, and only like 1.5% with crypto per latest estimates. Is she just dated in her thinking? Is she thinking back to like 2010? What's up with Yellen?
Well, that's what I was kind of referring to before. Like a little misinformed on that, because Chain Analysis is one of the firms that actually tracks stuff on the blockchain, and they do it for a lot of firms like ours. To abide by the AML rules, because we have to flag accounts that might be, used or sending to wallets that could be really curious. Look, when we had that Twitter hack, when like Barack Obama and everybody else got their hack and said, send me 1 Bitcoin and I'm going to send you 2 back, and some of those things, that people fell for. They thought it was legit, and because their Twitter hack, got hacked. All those wallets, quickly we were all working through, guys like Chain Analysis, to make sure that we weren't sending any coins out to those wallets to stop the activity. And I think so. She's a little misinformed on that. But Chain Analysis said it's like 1% or less that is really used for illicit activity. And the greenbacks, I mean, there's some comment that someone once said to me, I think 80% of all dollars have probably been used for some sort of drugs.
Oh wow!
And so yeah, which one's worse? I think it's a more open, transparent world in working on the blockchain.
Do you think that cryptocurrencies have the potential, like any of the ones that exist now, have the potential to replace the dollar, or will the Federal Reserve just come up with their own stable coin? There'll always be a fiat, and maybe they'll just coexist happily.
I'm more in the coexist, camp, because I think they will come out with a central bank digital currency. But I was talking to someone yesterday. I said, all right, so central bank digital currency comes out. How's that going to get in people's hands? So I have money at Bank of America, $10,000 at Bank of America. I'm now going to put it onto my own wallet. Now the bank doesn't have that money anymore because I'm holding it. Now, how's that going to get integrated into the point of service system? So does everyone have to have their own wallet? How the banks fit into how do the mid-sized commercial banks that need the Fed so much and need the dollars fit into this? So a lot to work out as the central bank, digital currency comes, but I think it will coexist with the private currencies. And I was reading some articles about that before I jumped on with you, is that there's a lot of debate on how that'll play out. But I think that's some of the things that have to be thought through over the next few years.
Yeah, I mean, inherently, initially, the concept of a digital coin seems complicated, because it's like, wait, I mean, like when I look at my phone, I see dollars there as a number, but these stable coins really have this or have this promise for using blockchain. And so really, I think the fear then just becomes, why wouldn't the SEC and the Fed, why wouldn't they just regulate Bitcoin out of existence if they see it as even a potential threat? Even though you're in the coexist camp, why do they want this to coexist?
Well, look, I think we look at it from a very US centric standpoint, right? That in the US, we don't want it, but now it's already in tons of people's hands, right? Millions of people's hands have it. So you're going to really hurt a lot of, US people that are your constituents as a government. On that. But if you take away from the US standpoint and we look at it from a global perspective, and you brought it up earlier, some of the, third world countries where currencies aren't stable. I was speaking to some folks in Brazil and have some business in Brazil and Venezuela, earlier in the week. And high net worth folks there, can't really keep their money in the bank because their currency gets devalued. It might get taken by the government. So outside the US, we're really centric to US, right? We're sitting here, California, Connecticut, or anywhere else around 50 states, and we have a great world to live in. We might have all these debates about politics and all that stuff, but overall, we have a pretty good life compared to what goes on in a lot of other places around the world where their currency isn't really dependable like ours, even with 1.9 trillion coming. And I think that's why if you look at it from a more global perspective, I think there's a lot of reasons why this makes a lot of sense outside of our little just mind of thinking, just how does it affect the US? How does it affect the world? It's a much bigger idea and much more bigger idealism for us to get our hands around.
So the Senate did just pass the $1.9 trillion package just while we were talking here. Obviously, this goes to the House and then Biden. Do you think that, we could potentially see rampant inflation in the United States? I mean, we've got, Fed Chair Jerome Powell saying, hey, look, we might see little spikes here or there, but don't get me wrong, we are seeing more disinflation than inflation, and we're struggling to get to 2%. What's your take on this? Can we go back to the 80s and have, 10% inflation?
I sure hope not. I sure hope not. Look, I don't think so, actually. I think I have a lot more comparison looking at it as what happened in Japan over 20 years with zero interest rates. And I'm like, I don't think we're going to hit that same inflation side that, Powell mentioned it and so forth, but then kind of backtracked. I don't think so. I don't think I think the government will do its best to try to keep that in check, even with all the money coming into the government. I think he's right. I think there'll be more deflation on that than inflation. So we'll see, but I surely hope not. I remember the 70s and 80s because I'm that old. The gas lines and all the, that was terrible. It was just not, I was like a 15-year-old kid in when some of those inflations and the gas prices just shot through the roof. I hope we never see that again.
Wow. Yeah, that sounded like a very unstable time, leaving the gold standard. But if a lot of people look at crypto as an inflation hedge, if we don't see inflation, is that bad for crypto?
No, because I think the other thing is effectively the crypto is the hedge as well versus the stock market. I think we'll see more and more, and it'll decouple over time here. We saw some correction happen intraday on Friday where, there was a big drop in the NASDAQ and then it bounced back. But I think it's a hedge against the market. I think it's a hedge against all the money coming in. So no, I think Bitcoin, and again, I think the use of it will take more, in place over the next 3 years. I think there's a lot of regulation that will come that will make it more valuable, and people want to hold more. Plus, never forget that it is a supply demand as well. Mm-hmm. There's only 21 million plus of Bitcoin, right? So there's only a certain amount of it. We're not creating anymore. And if more people want it, it only leads to pricing going one way. So
I see. Okay. So, that's a good point. The more people want it, and there are also a lot of, the hodlers, the people who, they have no plans to sell this. In theory, that could just continue to drive the price as people try to use it for transactions, right? People are investing it and using it as transaction money, essentially.
Agreed. And there was some stat I read as well earlier in the week that more and more coming off exchanges, Bitcoin, and going into private wallets. And therefore, that's the holding. And if, the last interview I saw with Michael Saylor on CNBC, he said, we have no intention of selling for 10 years. So all the amount he just bought is not getting back into the market. So again, supply demand on Bitcoin is, one of the guys that follows Voyager really well and writes a lot about Voyager on Twitter, Pat Ackerman, has this, wrote a whole big piece on the Metcalfe theory. And the Metcalfe theory is about a network effect and supply demand. And, I buy into that because, the more demand with that less supply. That's the simple economics that I think I remember taking back in college 20 something years ago. That'll lead to price increase. And that's just not for Bitcoin. That could be other coins that have set supplies too. And I think these are the things that people need to look at when they're making investment decisions, and what they're looking at on which coins to buy.
Wow. I understand. I think, I guess as a consumer, I struggle personally trying to figure out exactly what you just said, which coins to buy. Like, look, there's real estate to invest in. There's stocks to invest in. There's my own business to invest in. And there are private deals to invest in. Then there are, different industries. There's the cannabis I could pick. I could pick tech. I could pick NFTs, which we'll have to talk about that. How am I now supposed to pick between all the different cryptos too? Like, I don't got that much money to spread around,
Look, I think it's one of those things where first, putting something into crypto is the first place, right? And I compare it back to, I remember the days being in the equity market for so long, and I was at E-Trade, the early days of E-Trade, 99 to 06, what I call the formative years. The idea of investing in foreign stocks back then was like way off limits. Nobody would touch it. And then people started investing a little bit more and then learning more about that. It's the same thing here. A little bit of your investable assets go into the crypto. Start looking at them, doing a little bit of work, read the blogs, read some education that comes from parties like us. We have a partner, Market Rebellion, as well. Listen to places like you here and learn more, and then make decisions on where else you want to go. But always start with a couple of the coins that you're familiar with, whether it's Bitcoin, Ethereum, like DOT or Voyager token or any of those. and then pan out from there. But it starts somewhere. I think it could be really overwhelming for people. The stock market's overwhelming for people. Like, where do I want to invest? There's 10,000 stocks. What do I choose? And it's like, well, choose something and then start educating yourself and spending a little time each day learning a little bit more. And you will make sound investments, sound decisions from that. But don't think you could conquer it all in one. It's just not possible. All right, here's a suite of 3,000 coins. Which one do I want? You're starting from a bad place.
Yeah, and now what about, there are these coins like Cardano, which I don't know much about. I'm focusing my research right now on Bitcoin and Ether, and there's so much to learn and read.
Yep.
And the easiest thing for me to do is just try to silence out everything else and let me just focus on something, right? But I gotta know, I mean, if somebody or a company can just create a coin and it can get to, rank 3 by market cap, I don't know, that seems a little weird. Like, isn't that like creating a central authority again? Or what am I missing?
Well, I think you have to be careful on what you choose. We have a lot of our customers who hold a lot of Cardano on our platform. But I think it's again, understanding it. And I still have more reading to do on that myself. I pretty much wake up at 6 a.m. every morning and I try to get my first 2 hours a day just reading.
With your iced coffee? With
my iced coffee. And usually probably 2 over 2 hours too, to get me really wired up to make sure I can get through. And then, so I think it starts with there. You just got to go back and do the education, go learn. And to your point, there are coins just like that you just want to make sure that there's some validity to it. It could be used for something, and it's not just, a supply demand and all of a sudden everyone's going to buy it and then it's going to be, all the way down, and you're going to ride the down too. So you want to be really careful on what you do and educate yourself on all those points.
Got it. What's your take when people talk about DeFi, decentralized finance? Why should people trust those systems over, look, we got JP Morgan, the institutions that have existed so long. I mean, I talk about Bitcoin to like my father-in-law, who's I think 68 or something like that. He's like, what? No, I'll buy a little bit of Apple stock, but most of my money's sitting in cash.
It's look, I think decentralized finance is going to have a major role in everything we do in a financial services, perspective, but it's going to take longer too. I think that even banks like JP Morgan will, incorporate decentralized finance and those procedures and those exchanges and those concepts into what they do on a longer term basis. I know we're looking at it because we're like, okay, this coin does X. Can we bring that back to the consumer and give them more value? Because it's like the internet in a lot of ways. When the internet started in 1995 or wherever it was, and we all had dial up and we're like, how does this work? No one's ever going to use this, right? I mean, I said on an interview during the week was like, you had all the beeps and squeaks and the modems going and you're like, and then like 4 minutes later, you were actually on the internet. And then you went from one web, address to another. You had to wait another 2 minutes. And by the end, nobody kind of really understands, except maybe Al Gore, because he invented it, the internet. And but same thing in decentralized finance. I think it's going to take a hold, and consumers that know how to work within that will absolutely participate. Otherwise, they're going to look for institutions to help them navigate that. Because again, I think people don't necessarily know how everything's going to work, but they know that it's going to make their life easier. Think about if you were, buying a house and you were able to do the title on the house. The title is something on the blockchain that you can easily, getting a title and doing that title search today takes time, effort, and money. And so it could take weeks to get a title search done and all that. And now think about it, if it's on the blockchain and I'm selling my house to you and I've got the title, it's on the blockchain, you could see it, you could unlock it. Now I could pass that over to you and you get it. Isn't that a better scenario than going down to your local courthouse or local government and saying like, okay, well, who's got the title? Where? It's better, and it's better for consumers. And I think that's why, but most individuals are like, I don't want to do that. I'll have somebody do that for me. And that's how it'll work. And I think there's a lot of capabilities of the blockchain and all the smart contracts behind it to make our lives easier down the line.
I never even thought about that. I mean, right now, you're so right. The title process is so cumbersome. You've got basically a buyer and a seller have to fill out a form with their social, where they've worked and lived the past 10 years. And then you literally have these title officers that are trying to learn everything about your background and the odds of you having potentially debt or liens or judgments that could affect the value of this property. I mean, in theory, the blockchain,
right?
and I want you, maybe you can clarify on this. Some people say the blockchain in articles. Some people say blockchain. With blockchain technology, you don't. I mean, it's all transparent. You could type in essentially a parcel number, I suppose, in theory, because I don't think we're doing that yet. You type in a parcel number, and there you go. It's totally transparent. Anything that would be related to that, or maybe even a person.
That's exactly right. That's why I think when we talk about, either the blockchain or blockchain tech, everyone has their own way of saying it. Or it's the same thing, is that it's there. The information should be there, and it shouldn't be so hard to make transactions and understand and get it. And you're in real estate, like it could save 3 weeks or 4 weeks of time between getting a deal done to days, and make people more efficient, and really take some middlemen out of the equation. That the stuff's there, just go do it. But again, I think you will always have institutions playing a little bit of that middleman, because the individuals aren't going to know how to look these things up and do it, and they're going to need somebody. But it could be done instantaneously rather than the time frame it takes today.
Wow. Yeah, I wonder. I mean, even do you how about lending? Because I mean, even thinking about like a mortgage borrower,
Yeah,
they go through such a process of providing information, but maybe if their financial portrait were a little bit more transparent through blockchain, lenders could much more easily qualify people.
Oh, I completely agree with that. I think that the more stuff that can be transmitted or seen quickly is a better picture for consumers. And it all comes all the way, there's kind of this revival that's happening about it's all back to the retail consumers. The retail consumers using blockchain have really unlocked a lot for themselves in the future. And I think we're getting that transparency. We'll get there. There's some great companies that are doing stuff. Figure is one of them that are doing mortgages on the blockchain. And, it makes it really easy for a lender. Like, okay, here's the mortgage on the house. Here's what's left. Great. If someone sells the house, there's what it is. A lot of things that could be done so much easier. And financial services, look, the other piece of financial services I like to talk about is out of the GameStop scenario. When Robinhood was in front of Congress, they talked about going from a trade +2 settlement date for, buying and selling stock to trade immediately, immediate settlement. And now the NSCC, which is the clearing firm behind all of, the custody and clearing of the entire equities world, is like, okay, we're going to go to T+1. It's going to take us 2 years to change the system. But isn't that the beginning of going to T+ immediate? Immediate settlement is that we're cutting the time frame down. And by the way, 20 something years ago, the settlement was T+5. Then they cut it to T+3, then to T+2. So we're eventually getting to immediate settlement. So isn't that the perfect scenario for the blockchain? Isn't it like where things could settle immediately? And think about shorting of stocks. We had the whole issue with GameStop, and it's. I think on that was they said that 140% of the GameStop shares were lent out. Couldn't happen on the blockchain. You can't double lend something on the blockchain. It's an impossibility. Only one person could hold that coin or that address against those shares. It can't be two people.
If I lend you 1 Bitcoin, couldn't you then lend it to somebody else?
Right, but it can't be double lent. It can't mean that you can't have that Bitcoin, that 1 Bitcoin gets lent and there's a string and you can always follow the string. You can't have that 1 Bitcoin. You can't lend it to me and you can't lend it to the guy sitting next to me. So it's only 1 Bitcoin. Yeah, so that's what I'm saying is it has a chain to it. Now you may move it on, but that 1 Bitcoin's only getting lent once.
Now, I asked Vlad Tenev, the CEO of Robinhood, 3 different times in the span of like 3 minutes. How about blockchain for clearing? And every time he seemed to revert to, well, we're trying to speed up the settlement process and so on. Why would there be a resistance? Why would a firm like Robinhood not want blockchain? I asked him 3 times in different ways because I just thought it was a no-brainer for him to just say, yeah, that'd be great.
It should be. Look, I've been I helped run the E-Trade clearing side way back 20 years ago as well. So I understand the back end clearing as well as anyone. And we should go to the blockchain there. There's no reason why. And a reason why would be from the institutions to say, like, because they're making money on the float all the way around, right? So all the time lags is more float time and more time for someone to make money. Immediate settlement takes away some of that float. And by the way, 90% of all the retail trades that get done in the market are done in what they call locked in trades. They're done immediately. The other counterparty, they should be settled immediately. There's nothing complex around those trades. They should be done and settled immediately. So I'm not sure why he would, but there's no other place better for blockchain and blockchain technology than the financial services and the clearing and settlement of trades.
Wow. No, that completely makes sense. What about, I wonder if, I'm just trying to associate now the crypto market and actually how surprisingly stable, for example, Bitcoin has been, despite this disaster going on with bonds and the stock market here. I wonder if there's a way to, prevent some of the madness that sometimes happens in the market with DeFi as well, whether that has to do with bonds or stocks. But I'm not exactly even sure where to ask the right question there, because it seems like DeFi is so vast. We could do so many different things with it. I mean, even you bringing up the real estate example, I didn't even think about title clearing. I just always think real estate transactions is going to be 30 days. People got to have time to do their home inspections anyway. But in theory, you can make them like almost cash purchases, 7 days.
Yeah, I mean, but that's the beauty of the technology, is that these things are run on global nodes and it's all transparent and should be done immediately. And we will get there. There's no doubt, as a society, we will get there. It's just, it's usually a lot of the title, a lot of all these things are dominated by some players, and they've got to adopt it because they're just a major player, and we got to get more people to change their mind and their thinking. And they have to think through how they're going to get their model's going to change on this stuff. That's, and that really what it comes to a lot. Even the banks with blockchain and they're all kind of working on it. They're trying to figure out how they can incorporate it and keep their model in place where they hold assets, make revenues, and make profits, right? I mean, the corporations, that's what their job is.
I guess in theory, banks could go extinct. In theory, I mean, what do we need them for if everything is DeFi?
That's why I think in a lot of cases, the banks will adopt crypto and the DeFi and be the intermediary. So not everybody has to figure out how to go get a mortgage on the DeFi world, because they're still going to want somebody to do it for them. But I think the time frame on all those mortgages will take less. That's like one of the most painful process you could ever go through is a mortgage, a home equity line of credit. It's painful. The amount of documentation, the amount of documentation, the questions, the information, the papers get lost, and all of a sudden, it's 60 days in and you're running against your lock period on your rate. And you're like, I got to get this done. And the bank's like, we'll get it done. And most of the time it gets done at the last minute, but it's painful. It's stressful for people. There's no reason for it to be that.
Yeah, that makes a lot of sense. Yeah, and JP Morgan, I think they'll figure out a way to adapt, which actually, there are a lot of folks that worry that it's entirely possible that these coins get regulated out of existence. But what you had mentioned earlier is that, well, the consumers demand this, and it's really the government's job to do what consumers and society wants. And so the more consumers use it and the more banks use it, actually, the less likely it is to get regulated away. It would get regulated in, if anything.
I have the other, avenue I'll throw out there on that is Coinbase just did their S1, right? And so they filed an S1. It's now public. It's 300. I have it on my desk here somewhere. It's 300 plus pages, 100 pages of risk parameters. But the SEC kind of approved you don't get the S1 through without SEC comment. So now they know $100 billion direct listing is coming to the market. I'm hearing mid-April, maybe the end of April, the latest. So this is coming to the market. Retail investors are going to buy this stock. It's clear as day in the risk comments that nobody knows if these tokens are securities or not, and how the SEC or CFTC or any regulator is going to regulate it. So, it seems to me we're leaning towards regulation, because you're not going to let retail investors go spend, their hard-earned dollars in the equity market on a company that you may regulate out of business.
Yeah,
So,
well, that's a good point.
right?
If
I
the
mean,
point of the SEC is to protect people, why would they go crush people, basically, is what you're saying.
yeah, sorry, Coinbase, the 40 coins you have, 38 of them aren't good anymore, and now their business is gone. And you're like, what happened to all the retail investors that you
Mhm.
kind of let in? So I think there's a major point to that, where that's
Mhm.
a really good, you know, point for the crypto environment and crypto world moving forward, in the fact that this S1 was public. They're going to go, they're going to get public. I'm super excited because, they'll be the second, crypto agency, broker, or exchange that goes public. Hopefully we get, we get the comps to them, which would be really nice for us. But I think at the same
Yeah.
time, the it shows that we're leaning towards some regulation in the industry.
Well, how many times revenue are you guys selling for now?
12 to 15, and they're at like 50 to 60.
Oh my gosh, seriously, that's crazy. Uh, and that's what's wow. Is it? Yeah, that's a lot. So, how's their revenue model different? Is it just the 2% on the fees that they're taking, or I mean, you got to be taking some fees too, obviously. How are you guys making money?
Yeah, we're on the spread. So
Okay.
we like I said earlier, 40 to 45 on Bitcoin. We're a little wider on some of the other less liquid coins because we
Mhm.
guarantee people a fill. We also give them price improvement on their market orders about 70% of the time.
Okay.
But they earn the fees on the 2%. They earn it on the pro trading and the basis points to trade on the exchange. I'm got to go through the rest of that doc to find all the areas that they do. But look, I think yeah, we announced 20 million of revenue for the month of February. So that's 240 annualized, and we're trading at something like 2.6 billion to 3 billion. So 12 to 15 times, and they said 2 billion of revenue, and they're trading at 100 billion times. 100 billion on the
Yeah,
private market.
jeez, and that's pre-IPO. Once it
Oh,
IPOs,
geez.
if people go nuts for this thing, I mean, it could. I mean, imagine it doubles, and it's like a 200, $1 billion company. Jeez, now they're at 100 times.
It's going to be at least a 20% uptick is my bet on them when they go public, because I think people are gonna, it's the first big exchange to go public. They're gonna get a huge uptick.
Wow, that's incredible. So, what about like NFTs and this tokenization of things? To me, I still don't understand how somebody like Logan Paul can create a digital piece of art, sell it for like 3,000 ether in a day or whatever, probably even more at this point. Make $3-5 million by creating a digital art that some designer that he hired could have done for a grand. Uh, you know, what's happening? Is this irrational exuberance, or is there some seriousness to this all?
Look, I'm trying to get my hands around it as well. I saw, the NBA Top Shots is an NFT that is, creating a lot of value for the NBA,
Mhm.
selling video snippets of highlights of players. CJ McCallum, I saw him on Twitter the other day. It's like, where's my piece of this?
Yeah.
So I don't blame him. I mean, I don't know. I mean, I've got it. I've never been a big collectible,
Uh-huh.
person. When I was a kid, I had baseball cards or football cards or hockey cards, whatever. But I'm not a collectible guy. So I'm trying to understand how these NFTs, the owning a piece of the art, when you don't really own the art, you're just owning a piece. I'm trying to understand it because I don't see. Usually, you want to own the art because you want to hang it in your house or somewhere, right? I mean,
You're right.
it's different to me. I'm trying to get my hands around it. Like, what's the value of LeBron James video clip of him dunking on any of my favorite Knicks? So it doesn't really matter.
Yeah, I mean,
And there's a lot of
in
value
some
for that,
way,
but I don't get it.
yeah, I mean, in some way though, and this is because initially I'm right there with you. I'm like, I don't understand. Like, why do I care to own this? Like, there's just going to be another piece of art tomorrow, And again, I've only got so much money. But then on the flip side, how is Bitcoin any different? It's all I can't touch it, I can't feel it.
Correct. But Bitcoin will be used for things, in the future here. We know that Bitcoin will, and, as I said, not right now, but it will be used in the payment world. It will be used, and people do use it for that, but just not in the US as much. So
Mm,
the NFTs, I'm still just trying to get my hands around, like, a fractional ownership, which has gone on for years, by the way. Fractional ownership of art and so forth has gone on for years. Like how that, should I participate? I need to learn more. I don't know enough about it. I don't know enough about where things, where they can trade, how you can sell them, what's the cost. I don't know any of the structure of that either.
Right.
Trying to learn more on that stuff.
That makes sense. So, I mean, is there going to be, I mean, there's so many different platforms on these NFTs too. Any plans to incorporate these into Voyager?
It's all about educating ourselves first on, and that was one of the things I was going to follow up on, is that there's so many platforms, like which ones do we want to hook, which ones do we want to connect to, but different than like offering, cryptocurrencies. There's Bitcoin, there's thousands of them, but each one of those art, there could be art is on this platform, art's on that platform, art's on that, so each platform has different pieces of art. So connecting to all of them is almost an impossibility. So how do you pick which ones you want to do? Like, who's going to have the best products? I have no idea. It's something we have, we have to learn more about.
Yeah, there's even, I think I heard ARK Investor, Kathy Wood, obviously very popular here in the investing space. She's talking about crypto NFTs, or NFTs where essentially it's art, but then it's layered art. So you've got, the first artist, and then there's going to be another artist that can draw on top of that or something like that. But then the blockchain technology helps us always know who the original artist was. Like, this is endless. And to me, I don't understand how there could be so much money to keep supporting this stuff, because there's so many different variants and versions. Like, I guess maybe the Fed should just keep rolling the money printer.
Well, I think it comes back to, there's a lot of money to be invested, and people are looking for things outside of keeping the money in the bank, because the bank is 0% and they're holding your money. So what can I invest in that I think I'm going to get more value down the line? And I think that's all it is. And the NFTs are just part of that. And I have to, like I said, I just have a lot more work to do, a lot more 6 a.m. reading to do on NFTs and how they trade. And, what's the, if someone, that art got sold 3,000 pieces or so forth, or whatever it was, like, how do you resell it? Is there a resale market, or are you holding it and there's no resale market? The value, as I said earlier, sometimes is that it's a scarce entity that people want. So, something like Bitcoin's 21 million and people want it. And so it's scarce. Are there a lot of people that want to buy, in the secondary market after the initial NFT of selling that art? Is there enough people that want to buy, pieces of it, after the fact? I hold it. Can I sell it to someone, or is that market dried up because they've moved on to another art piece?
Right. Well, yeah, exactly. I mean, even seeing now, you can NFT here in the comments. Somebody says you can NFT songs, and I mean, really, you're just gonna.
Yes.
I mean, if everything's an NFT, my big concern is, fine. Look, maybe prices will go up. Maybe people will just keep making money over time. But at some point, and I don't know if that's the situation we're in now, but at some point, if we have a market crash, I feel like people rush to liquidity. And to me, if somebody's like, okay, I'm going to start selling off my Logan Paul coins so I can survive, I personally worry that what if other people are like, nice card, but we're in a market crash. I can't spend money on that right now. Like, the value of these just evaporates.
Yeah, I just don't, I've got to get my hands around this, because I'm really not, I'm really sitting here going, what's the resale market on all these? And the music one is interesting too, because, Tidal was just sold to Square yesterday, right?
Yes.
And a lot of things I read about that was that, Square bought it because of the ability to NFT these things. And so,
is that why they did that?
It was one of the comments I read, was that they bought it because they think they might be able to NFT, a lot of the music. So I'm like, interesting. So now I think everybody's watching, listening, and we all have a lot of education to do. There's probably a small handful of people that really get it, but I'm not there yet. I haven't figured out how we participate and how we could bring it to consumers as well.
The next thing we know, we're going to start doing NFTs on tweets.
Well, you saw Jack Dorsey selling his first tweet for for $1 million.
Wait, are you serious? I didn't see
That's
that.
serious. He announced it today, and Justin Sun said he bid $2 million.
Today?
Yeah, today. Yes,
What?
he's selling the first tweet for $1 million. The
No
very first
way.
tweet.
I was joking. Jack Dorsey is trying to sell. Oh my gosh, you're right. What tweet is it? Let's see. Apparently, you can actually sell your tweets as NFT, non-fungible token. Oh my gosh, look at this. Hold on. So if let's see here. Here we go. So this is the first. This is very interesting. So hopefully I do this correctly here. There we go. Jack Dorsey, billionaire co-founder and CEO of Twitter, a man who stands Bitcoin right now. Okay, here. You're probably familiar with the famous tweet, "Just setting up my Twitter," from 2006. This is the tweet he's selling. No way. Just setting up my Twitter. I made, hi Jack, I made a $500,000 USD offer to buy your tweet.
Yeah.
What? This is just happening just now.
Yeah, I saw it this morning, and I'm like, wow. You know, a million, 2 million, something for the first tweet. So
sorry. Let's see here. Let me make it a little larger for people to be able to see. I realize I probably had the screen a little funky there. Sorry about that. So there we go. Now the screen could be a little more clear for people. Sorry about that.
But Jack Dorsey's such a philanthropist. That money's probably going to go to some charity. So God bless him. It's going to go somewhere good to do some good. But someone's willing to buy the first tweet.
That is unbelievable. So you get a digital certificate of the tweet. I'm honestly shocked because I didn't hear about this and I was totally joking. And here it is, that literally the guy we're talking about, trying to maybe potentially NFT songs is selling his first tweet. And so tomorrow, after this sells, as of Saturday morning, the highest offer was $2 million. I mean, after this, in theory, I have updated my offer to $2 million. So, I mean, after this, what's going to happen next? The second tweet from Jack is going to sell, and then Elon's going to start selling his, Doge to the moon tweets and stuff like that. I mean, part of me thinks like maybe the stock market's crashing because everybody's putting money into NFTs now.
It makes me wonder, because I know my co-founders, are looking at this. It's like, hey, maybe we need to. Maybe I need to get in this space a little bit more, but I have to learn more. But that's what, you brought it up, and I'm like, yeah, just so happens that he's selling that tweet for $1 million. Now it's 2. So it'll probably go, someone will step in and probably go for $5 million, maybe more.
This is ridiculous, man. Okay, well,
I'm reading some of the comments here, and it says, maybe you should NFT some of your tweets with your following, and, why not?
Wow. I mean, like, see, in some sense, it's like, geez, like, why not? Like, make a Meet Kevin NFT or whatever. But, I also, like, I would feel horrible if somebody bought it and then there was like an NFT collapse, because then it's like, my NFT collapsed, that would, like, I don't know. Like, I feel like I'd have to buy it back, out of guilt.
Oh man, I'm reading some of these tweets, and it's like, someone just said, can we buy Trump's last tweet, so as president? So there's probably an endless supply of stuff that can be NFT'd here. So, I guess the value is what people think the value is. It's an interesting concept.
Wow. So I want to go back to your company here. How did you start Voyager? How do you even create a company like this? How many people you got there now, and how did this compare to when you started?
Oh man, it's been a wild ride, but like I said, I've been I call myself the gray hair in the room, so people can see all the gray going around here now. I've been in the capital markets 27 years now, and I left my old business, which I built, Lightspeed Financial, from 8,000 trades a day to 450,000 trades a day.
Wow.
Sold it to private equity guys, wound up leaving and got into API brokerage, looked at crypto, learned a little bit about it. Then I met my co-founders, 2 guys, Philip Aton, Gaspar Dedruzzi, serial entrepreneurs, have done unbelievable stuff with private companies. And But then they brought in a friend of theirs, Oscar Salazar. Oscar was the founding CTO of Uber. He built the very first Uber platform.
Nice.
The first app we ever saw in Uber, that was Oscar. And we looked at the market and I said, wow, man, this looks a lot like the late 90s, early 2000s with really, fragmented execution. I looked at mobile apps that people were using and trading on. I'm like, man, this is just, it's not easy to get adoption off these apps. Let's figure out how to do it. And we sat in a room. We came up with our first kind of MVP version of the app. And everyone said, Oscar was like, hey, you'll probably get rid of this in a year. We built it. We brought it to market mid 2019, effectively. It's the same app we have today. Nobody wants us to change it. It's like our MVP is now the app. And we've added a lot to it. We're going to add a lot more to it. We're got debit cards on the horizon, trading stocks off it, using Bitcoin and USDC as a denomination. But we all got together. We just thought that we needed a better way for retail consumers to mass adopt crypto and participate in this market. And the market was too fragmented with not a great UI UX for retail consumers. And so we kind of took the cross of, my experience at E-Trade, what we saw was effective at Robinhood, and said, let's make an app that makes make the market accessible for everybody. And that's what we did. And so now we've seen this great growth over the last 6 months.
If you just mentioned buying stocks with BTC, I mean, you would have to convert that to dollars. So you would be basically, there'd be some exchange risk for you, wouldn't there?
Yeah, we're building that all in. We've built our pricing engine already for that. So we know how to do it and allow people to make that trade instantaneously. Because we strongly believe that crypto and your money is fungible, right? So you should be able to do, if you own a house and it's on the blockchain, right? If you want to trade that, tomorrow or sell pieces of, everything's fungible. Anything you own, and NFTs are really proving it. Anything you own is fungible. And you should be able to trade at any point in time. So our goal is to bring certain stocks to the platform and trading against Bitcoin and USDC, and then build from there. Start with some and keep adding more, because we don't want to get too confusing for consumers, but we want to give them, hey, like Tesla or Apple or Amazon, and be able to buy that and buy it in fractional shares too, and do that over the platform. So that's our goal, because we think,
wow,
financial services of the future, everything's fungible. People have, and even if it goes into their wallet, we're playing the middleman to connect people to all this stuff and really be the pipes on that stuff. So that's the way we look at it.
There could be a credit card in the future as well.
Oh, 100%. 100%. I'm just going to plug in my headset as my AirPods keep going on me here.
Yeah, no worries. Wow. I mean, this is so really illuminating just how much is going on in this space. So when you're back, I got a question here that's kind of inspired by the comments here. Let's see. There we go. Welcome back. Hear me all right? There. Oh, I can't hear you now, so it might have gone to mute. Oh yeah, you're on mute. Get you right back there.
Here we go. Yeah. So
there we go.
Yeah, so credit cards are on the plan. We just, we've partnered with, we got a partnership now with MasterCard. We're part of the Visa Fast Track program. So we're looking at all that, and we're not just looking at it from a U.S. perspective. We're trying to do it globally. Make sure we bring the services to consumers globally, because we get demands from Canada, Europe, Latin America every single day, South America every day. When you come into Australia is one of them. Like, you got to come to Australia. We need you. And so, yeah, we're looking at all that, because we think, it's a global economy, it's global currencies. People need to have that fungible. That's our goal, and get that global.
Got it. Robinhood is going to IPO. They've got a debit card. They've got, the crypto buying, but they don't have a wallet yet. You can't really do anything other than, I don't actually think you're getting the actual coin either. I think you're just tracking, basically.
Correct.
Are they a threat, or are they just nowhere even close to what y'all are doing?
They've built a great company. Vlad's really built a great, company, but they're an equity options company. And crypto they dabble in. They do it to kind of just add, more product. For us, we're a crypto company with blockchain and crypto is our core competency. That's not, and you made the comment, he talking about settlement and blockchain, and he kind of avoided it. We would take that straight on. We think all this stuff should be on the blockchain. So we're a crypto company. Plus our average customer size versus, Robinhood is twice their size. 10,000 a customer versus 5,000. They also said their mean customer was $240. We have customers that continue to make deposits and engage on our platform. So we look at ourselves differently from them. I'm excited for them to go public too, because again, it'll probably be a high multiple, and hopefully we get some tailwinds from that too. So, but they've built a great company. A lot of ex-E-traders are over there now. So I know a lot of the people in the back office that I worked with 20 years ago. So we all came out of the same ilk. When you go back, and what's in a lot of these online brokers today all comes from either E-Trade or Schwab way back 20 something years ago.
That's incredible. Do you think Robinhood can recover then from, what happened here in January? I mean, anytime I run a tweet poll, and I don't know, maybe my audience isn't the best sample size, but like, for example, yesterday I ran a tweet, who's buying the Robinhood IPO when it happens? 15% yes, 19% no, 50.7% hell no. And the rest are out of money.
We'll see. Look, I'm curious to see their S1 because they said something about filing an S1 confidentially. I'm curious to see what they'll say when that comes. Look, people's opinions change over time. Like I said, I thought they've done a good business. I think what they did recently was, not in the best interest of the retail consumers. I think it could have been more open and honest about it. On the problems with DTC and NSCC and the capital. Look, I think only time will tell how they rebound on that stuff. So, there's a lot to be thought through if you're in their shoes.
Yeah, no kidding. Geez. Oh, so overall, I mean, it sounds like just endless growth at your company. And it also seems like the space is really just becoming known. And personally, I feel like the more people, I mean, I honestly think, and I'm totally pulling out of thin air here, but I feel like maybe 5% of people actually understand and realize that there are like these crypto apps that we could download, like Voyager, and it's like, wait, I can buy crypto here. I can make interest on my money here. I can invest like this, and in the future, I could get a debit card or buy stocks. I feel like most people don't understand any of this yet, and that actually seems like a huge opportunity.
I'm a huge sports fan. I like baseball, diehard Yankee fan. And I tend to say we're at the top of the second inning in crypto adoption. So we haven't even gotten out of the first third of the game yet.
No.
We're in the top of the second because we still got to get people to adopt, understand. Look, I think why we're bringing the debit card to the market. We're offering, it's to get people in the ecosystem and understand crypto and how it works, and paying 8.5% interest, and you get a debit card to go swipe. So you go pay. You go to the gas station, you go swipe, and you're earning 8.5% up until the time you swipe. That's an interest-bearing checking account. Who's not going to sign up for that? Why wouldn't you want to come use my debit card? And it just gets people in the adoption cycle. Get them into the ecosystem, get them comfortable. Then they'll buy some Bitcoin. Then they'll do some other stuff. And all of a sudden, they're like, wow, I should have been doing this 3 years ago. And that's how we look at it. It's like we need to be part of the adoption on all this.
Yeah. No kidding. I mean, I feel like in the future, my father-in-law, whom earlier I exemplified as, being very suspicious of this, in the future, he might go to JP Morgan, and I'm envisioning this. Maybe they might say, hey, look, we can open up this new savings account for you. You could get, 0.25% here with your dollars, or if you convert it to X coin, whatever, we'll pay you 5% even. I feel like all of a sudden he's going to become familiar with blockchain overnight.
That's exactly what we think, is that you've got to meet consumers, and consumers are in all different buckets. There's those who are real believers already, early adopters, the real early adopters, then the next phase of adoption, but then the next phase of consumers that are still skeptical, you've got to meet them where they want to be met. And that's where I think we do a really good job as a company, is trying to meet them where they're used to something, and they're used to a debit card. So we'll meet them there and get them there and get them in the ecosystem. And that's the way I've thought about it. I remember the E-Trade adoption. I was there in 99. online broker. I was like, really? I'm going to send these guys some money and I'm going to be able to buy a stock? I don't know about this. And then you had to kind of figure out ways to engage and get them in. And once they got in, they did more, and they brought more of their wallet, and they did more on, in online brokers, to the point where online brokers bought banks. Now, you could see the same thing happening here, where we get people in and then we become a pseudo bank. Maybe we go buy a bank to do that too. And we start thinking about things from a pure consumer perspective, which is the way E-Trade started. But as they grew, they got out of that. Today, we are all about bringing things from a consumer perspective. My team works endlessly on trying to figure out how to bring user experience to consumers that they want to use. Are we going to be 100% perfect? No way. I mean, I lose sleep in the fact that I want to be 100% customer satisfaction, but I know that's almost a near impossibility. But we try and we strive for that.
Now, your stock has gone from like 60 cents to $13 and $14 actually here in the after hours on Friday in like less than 6 months. What'd you do? What happened?
We made a couple of changes. Literally, I raised money at about 15 cents US in May, June of last year. So you can see where we've gone. All public information. But we made changes, and we focused on the product, engaged with the consumers, spent a lot of time on the in social, engaging with consumers, put a lot more effort into our loyalty rewards program and the Voyager token to engage consumers, to give them more value for that, so that they get more interest. If you hold tokens, you get more interest on our platform. We got some cool stuff coming on that too soon. And really come back to why would consumers use the product, is going back to the consumer to get their thoughts and engagement, and then take it. Then we hired someone to run our digital ads and our marketing from that perspective. She came on board in November, and all of a sudden we started seeing this adoption, because crypto is about the people. If you don't get back to the people to understand what they want, you're never going to be successful. And we had to make that commitment, and we did back in June, July, in engaging with the consumers and understanding their points and what they wanted to see, and listening to them and making sure we're there. And that's how we've been able to do it.
Wow.
And we delivered results. So you do that, you deliver results, and then the market loves you.
Wow. So, I mean, really, with all this incredible adoption of not only the explosive growth of your company and other companies, I mean, the more I study Bitcoin or cryptos, the more it seems like there's no way these could go to zero.
There's no way. I mean, first and foremost, there's no way Bitcoin goes to zero. Anyone who says that, you should throw them off the show immediately, because it's just not going to happen. There's too much adoption. And I think the same thing is for most of the, a lot of the coins, and we're specific about the coins we take on the platform, so we feel good about their long-term health. But, the idea of the major coins going to zero, no shot. No, it's just not happening. No matter what else comes out in the market, they're the strongholds. They're the core of cryptocurrency. They're not going to zero. And I think a real inflection point on that was about, this time last year, right? When COVID really hit, and I think it was March 12th. I tell a story that I was sitting on my couch. It was a Thursday night, I think it was. I'm watching the market during the day. I already sent my team home from New York City. We work in the city. I was like, guys, we're at home for the next 3 weeks until this COVID thing passes. Well, a year later, we're still thinking, when does this COVID thing pass? And I'm sitting on my couch, and I'm like, stock market went down that day, and I'm watching Bitcoin. I'm like, okay, 7,000, 6,000, 5,000, 3,500. I'm like, oh yeah. I'm like, I was watching some combination of the Knicks and Rangers, and I'm saying to myself, 2 years worth of work thrown out the window. This thing looks like it's going to go to zero. Like, how could this be? There's real value here. And then all of a sudden we started ticking back up, and we are where we are today. To me, that's an inflection point, because if it was ever going to go away, it would have done it a year ago, and it didn't. Wow. It's resilient. Investors are resilient. The consumers behind it are resilient. So it's never going to zero.
I mean, it's always so good to compare it to, I feel like, March, because in March of 2020, it seems like we were really at like peak fear. Everybody, there was real panic. We had no idea how deadly this was potentially going to be. I mean, there's a reason all the toilet paper sold out and this madness was happening throughout the country. Here we are talking about the market crash or selling off in tech, for example, over the last couple of weeks. But I mean, bond yields ticked up. I mean, it's nothing compared to what we had in March of last year. Am I wrong to make that comparison?
Oh, geez. I mean, I mean, I do a lot on Twitter. I read a lot on Twitter.
Yeah.
I see what consumers say. I talk to them on Twitter, and the panic of, like Voyager token went from 650 to 570, Bitcoin from 55 to 47. And people are like, oh, the fear. It's like, hey, hang tight. I mean, that's nothing. Remember a year ago that we were all just, fingers crossed that we were going to come out of it. And look, we're on the verge of coming out of, the worst part of it all. And with the vaccine and more people getting it, we're on the verge of stepping out of this, which means we've got so much upside in these things, coming forward. It's amazing. I mean, a year ago I remember calling my own, guy that I use. I'm still an E-Trade customer, been there for years, obviously, because I was an employee there. And I'm like, what do we do? He's like, patience. And I'm like, okay. And that's what I now say to consumers too, is like, really just patience. And everything we do is patience, because there's ups, there's downs. But if you believe, and we sure do, you're going to be rewarded for your patience. And
wow.
It's 12 months ago was panic everywhere. And, I wanted to get, and the E-Trade guy got me on the phone with BlackRock, and I was talking to BlackRock because they manage the ETFs, the portfolios that I'm in. And I was asking questions, and I was like, all right, I got it. I agree with this assessment, leave it alone, and we'll just have some patience. But I did my research, and I had to make sure that, I understood where people and economists thought things were going. But yeah, if nothing crashed 12 months ago, we're good. Everything's upside.
Wow.
Everything's upside.
Wow. Everything is upside. That's incredible. And so, I want to wrap up kind of circling back to the beginning, which was your thinking that we're going to 100K in the next 100 days. Why? Is it inflation? Is there something happening that you think is a catalyst? What's going on?
I harken back to the same things. It's 1.9 trillion of stimulus coming into the market, backed by, like another trillion is going to be behind it because they just want to keep throwing money to fix problems. We're in this consolidation phase, and I think people are going to, we're going to veer hard up out of this because the demand is going to continue to increase. And so my COO, fellow by the name of Gerard Hanchy, who's followed a lot on Twitter and has done some great charts. He's done his charts, and he's been technical analysis has been like really close to spot on. And he has it over 200,000 by the end of the year, but I'm going to step back a little conservative and be 100,000 in 100 days is I think it's there. I think people are going to see it. And then I'll come back on and I'll say I was right. And you can get me back on and say I was wrong too. That's okay too.
We'll have to do that. So what's going to double first, your stock or Bitcoin?
We just keep plugging along every day. I can't get myself, I don't want to get myself in trouble. I'm not Elon Musk. I don't have that. I don't have that pull, but our business keeps growing. I can't put my middle finger up to the SEC. That doesn't work very well.
No, good point.
But no, we're seeing strong growth. And I think, it's a good, solid, acquisition for people, investment for people. I do think that, like I said, the simple one is just compare us to where Coinbase is, 12 to 15 times revenue versus 50. And like I said, products such as debit card, credit card, margin, stock trading, all coming, over the next 12 months.
Yeah.
A lot of upside in our business.
Wow. So, and VGX, that's your token, right?
It's our token. That's our rewards token. Yep.
Okay.
Yeah.
Wow. I mean, really, really incredible. Really exciting. So where do people go to learn more? Give us a shout out of your company. It's so exciting to talk to you. What do people do now?
Yeah. To learn more, go to investvoyager.com or go to the Android store or iOS, download the app, get it. We have a waiting list right now because we're going to get rid of that by probably Monday. So have a little patience. You'll get the app. You can start using it Monday or so. But yeah, go to the website, learn more about us, download the app, play around with it. You don't have to necessarily sign up to go play and see what we offer. So go, feel free, do that and play around with it, because I think you'll be really pleased with the experience you get.
So absolutely incredible. I mean, this was very, very insightful. I thank you so very much for all of this, folks. If you've enjoyed watching this, obviously check out Voyager, share the video, like and subscribe. Wow, this was absolutely amazing. Any final thoughts? Is Ether going to go to 50K?
I don't know about that one. Like I said, I think it could, not as fast. I think there's a lot, there's a lot time frame on that too. I think there's, but like I said, my coins of choice tend to be my own token. Obviously, I like Bitcoin, I like Ether, I like DOT. And I kind of just stay and stay holding those. I add a little of the others along the way because we know a lot of the foundations, and we just want to be supportive of them.
Got it. Awesome. Amazing. Thank you so much. Stand by. I'm going to go ahead and end the broadcast. Thank you, everybody, for watching, folks. We'll see you in